Okay, welcome to the introduction for getting set up. If you want to do algo trading or algorithmic trading, you're going to need to choose a brokerage that will allow you to do that. And there's several factors to consider when choosing a brokerage. So this introduction will be looking at about 20 of those things to look at when choosing a brokerage. So we're going to go through this list. Obviously, some of these things are more important than others. For example, how much you plan on trading with might block you from doing certain instruments. For example, if you want to trade stocks, daily day trade stocks in the US markets, you would have to be a pattern day trader, which means you would need a minimum of 25,000, right? And so understanding how much you're going to trade, what instruments you're going to trade, and really what you need is going to be really important in kind of choosing a brokerage. So we're going to go through some of these things to maybe help you better understand which brokerage might be best for you and where you're at. Because, we do want to see traders that are starting on all ends of the spectrum, maybe just beginning traders who have a very little amount of capital to, I would love to see or work with traders that have 7-digit accounts. So definitely want this community to be open to everybody on all sides of the spectrum. So the first thing that we need to consider when choosing a brokerage is obviously API access and functionality. So API availability ensures the brokerage offers an API interface for programming access, right? I personally use Interactive Brokers. They have an API, and my language of choice is Python. And so APIs have different protocols. They have REST, they have Fix, they have WebSocket. Fix would be for institutional level, high frequency traders that use algorithms. It's a very, very complicated infrastructure, but there's different protocols. REST and WebSocket are very common protocols for API. In terms of API, also functionality, verify that the API supports all necessary functions, including market data retrieval, order execution, and order management. This is just making sure that the API allows you to be able to do all the things that you want to be able to accomplish in your algorithmic trading. So definitely having an API library that's very, very flexible is going to be the best option or solution for people. Obviously, that's going to be available in some sort of documentation or support, making sure that whichever brokerage you choose has really good documentation on their API. I am collecting all the documentation for all of the APIs and creating custom GPTs for them, which will allow you to use these custom GPTs to better understand the APIs from these different brokerages. So I do plan on creating custom GPTs for each brokerage API documentation. And then obviously in terms of the API, reliability and stability is going to be important. So research the API's performance history for uptime and latency issues. You definitely want something that's going to have a very, very strong uptime and very low latency. So the number 2 on that is latency and speed, or execution speed. So having very low latency is just going to make sure that your orders are executed very, very fast. Order execution speed, access how quickly orders are executed once placed. This also depends on where you're placing the order, where you are located. If you're not like doing high frequency type trading, you don't need extremely low latency. Seconds will be fine, right? High frequency trader trade in milliseconds. So they're the type that need extremely low latency. They need servers that are close to exchanges and that really strong bandwidth and infrastructure. But for most algorithmic traders where you might be trading in seconds, I trade in seconds, I don't trade in milliseconds. You don't need extremely fast speed. So that's going to be mainly for high frequency institutional level traders. Market data access, this is just important, making sure that you have real-time data and that you also have access to historical data for all the instruments that you're trading. Some of these brokerages, have very, very short bar windows for historical data. You can get 1 second, 10 second, 5 second. I primarily work on 1 minute. And so you want to make sure that you have access to all that historical data, because your algorithms are going to be oftentimes highly built on that data, the historical data. So that is important to make sure that they do have a wide variety of bar sizes when it comes to historical data. Your typical open, high, low, close, volume style candlestick bars, but also that historical data goes back pretty far. You might want to stretch back sometimes even years. I sometimes will test algorithms back well past a year to see how they perform in years past. And then data fees. Some brokerages do charge fees for the data. I use Interactive Brokers, and they are a broker that does charge you a small fee for some of that live streaming data into the trader workstation. So be aware of that. Obviously, highly important is cost and fees. The commission structure is going to be hugely important. So understand the per trade costs and how they might affect high frequency trading. If you trade a lot, there have been times where I've traded more than 100 trades in a day, and that can add up. I've had commission fees that were astronomical for a single day because it was so frequently trading. So being very aware of the commission structure for each trade is very, very important. API usage fees, if there's anything related to the API and how you might be charged that way, that's important to note. Account minimums, check for minimum deposit requirements or balance thresholds. I think this is really important if you're a beginner trader to also know, is there any account minimum to set up a testing environment? Because maybe you have very little capital, but you want to get into algorithmic trading and start testing. And some brokerages might require a little deposit in order to be able to have access to the back testing or the environment where you can back test. So just be aware of that. And if there's any inactivity fees or spread costs, particularly when it comes to Forex and CDF type trading. There are some platforms out there like Alpaca that is free. Alpaca is a PFOF, which is pay for order flow. So they send all the orders to market makers like Citadel and some other large market makers to execute on those. So they do commission free. And Alpaca is kind of a newer algorithmic trading platform. But again, it is a pay for order flow. So it makes it free. I don't know how I feel about pay for order flow platforms. Robinhood is a pay for order flow platform. That's why it's free. Probably isn't going to make much of a difference at all for most traders, again, that are holding trades long. Sending those orders on to a third-party market maker, I don't think is going to be a big deal. So there are some really free solutions out there if you're okay with having all your orders sent to a market maker first. Number 5 is supported markets and instruments. Obviously, it is important to know what your broker allows: stocks, options, Forex, cryptocurrency, and all the instruments around those asset classes. I personally trade stocks and options, looking into futures, but I don't trade Forex or cryptocurrencies. Also, it's important to know, are there any? For me, I do both long and short positions, and so sometimes with cryptocurrency, it isn't as easy to take a short position. You need different type of derivatives to do that. So knowing what type of assets you're going to be trading, and does your platform support those assets? Obviously, international markets, are you going to be trading internationally? And any type of regulatory compliance. Verify that trading certain instruments complies with the regulations in your jurisdiction. Whatever country you're in, you got to make sure you understand what the compliance is for those instruments that you'll be trading. Regulation and security. Obviously, in the U.S., we have the SEC and FINRA. These the brokers should be regulated by reputable financial authorities. I agree with that. I chose Interactive Broker, which is a pretty large reputable brokerage that has a highly supported API, but it's also regulated by all of these financial institutions. So there are a lot of brokerages out there, and some of them may be very new and some of them may be under-regulated, and that can be a little bit scary. So definitely best to choose a reputable broker. Fund security, if there's any type of protection for your funds, that's important as well. Is there any type of insurance coverage as well on your brokerage account? And then data security. So again, going with more established brokerages assures that you're going to get some of this data security, insurance coverage, fund security, and regulatory oversight. If you're going with a very, very new broker, unknown broker, there might be some risks there. So that's something definitely to consider as well. Platform reliability. Again, you want a reputable broker that has a very strong infrastructure around it, because you want good system stability, downtime and maintenance, and then any type of disaster recovery, right? We're dealing with programs and computers, and you need a very strong infrastructure if you're going to rely completely on a computer program to execute your trades. And so again, I think choosing very reputable brokers that have very strong infrastructure is really important. Good customer and technical support, I think, is important. Make sure that they have that available. Technical expertise. Again, I use Interactive Brokers. I've called in several times into their customer support. They have an API specialist, and they've actually been very helpful when I have questions about their API. Hopefully that we will have some tools and a community that can also support and assist in answering some of these questions. But some of these guys that work internally at these brokerages might have the most expertise in their own APIs and any issues with these APIs. So definitely I'd make sure that the brokerage you choose has good technical support. Number 9 is making sure that they have your brokerage has all of the order types and execution types. Advanced order types, I think, might be a part of the algorithms that you build. Stop losses, trailing stops, conditional orders, bracket orders, stuff like that. Making sure that the API allows for those type of order executions, I think, is going to be really important. Smart order routing as well. I know the Interactive Broker, I almost exclusively use smart order routing to make sure that I get the best price for my trades, and then it's not all going to a single exchange, but that it is being routed to the best exchange with the best price. There are some that have partial fills or all or none options. Just be aware of those as well. Margin and leverage. I think it's really important to know the costs associated with any margin or leverage that you're using. Understand the initial and maintenance margin requirements. Also, that's really important for pattern day traders and futures traders, understanding the initial and maintenance margins that are required to be able to trade certain instruments. But then also, when you're using margin, what are your costs on those margin? And then obviously be aware of interest rates charged on borrowed funds. And on the vice versa, that there are brokerages that will pay you cash on or pay you interest on your sitting cash. Right now, interest rates are high, and so I'm seeing up over 4% for sitting cash. So that's great as well. Not only understanding your initial and maintenance margin requirements, fees associated with that, but also understand what you get paid on your sitting cash as well. So number 11 is trading limits and restrictions. Position limits, check for any limits on the size of positions you can hold. Obviously, that's important. Order frequency limits. Some brokerages may restrict the number of orders you can place within a certain time frame. And then trading hours. Ensure the brokerage supports after-hours tradings if needed. Obviously, if you're trading futures or cryptocurrencies or forex that trade after hours or almost 24/7, you need to make sure that you're able to trade after hours. Also, obviously, any type of limits that also comes to play with your API when it comes to historical data and data requests. Leveraging algorithms and programming languages like Python allows you to crunch a lot of data and run a lot of tests over a lot of data, but there may be limits on how much data you can pull from their servers at a time. So if you're trying to grab thousands or tens of thousands of bar data for various stocks and run algorithms and backtesting trades on those, you are probably going to get capped. So having a strong understanding of the limitations for the API when it comes to historical data is important. And then obviously if there's any trading limitations, that's really important to know as well. Integration and compatibility, obviously knowing the programming language you plan to use. I'm a big fan of Python. It is one of the most widely supported and used programming languages when it comes to algorithmic trading, but there are other ones that use Java, C++, C#, and other ones. There are brokerages out there that use their own type of language. For instance, NinjaTrader uses NinjaScript and MetaTrader uses the MetaQuotes language. They oftentimes are very similar to a core language like C# or C++. Again, I am creating custom chatbots that grab all that data, so that will help you utilize those chatbots to help you write your programs in those languages when we kind of have the API documentation pre-built into those. But definitely understanding the language that you're going to be using for your algorithmic trading and what languages your brokerage supports. In terms of what I'll be sharing on this platform, I will be sharing mostly Python scripts. But on top of that, I hope to get some people involved here that might share different languages and different scripts and algorithms that they're utilizing. But also you can utilize these AI programs to convert Python scripts into a NinjaScript or into a MetaTrader script, or even taking a Python script and converting it into a C# script. So definitely you leveraging these AI chatbot tools allows you to convert any type of script, AI bot, or whatever into a different language. But sometimes it's just easiest to use the same language as other traders and copy parts of their script that they have. Obviously, a lot of these brokerages have integrations, third-party platforms and integrations, so just be aware of those. For example, I know that we've seen a lot of people come as community already that use MetaTrader, and I use Interactive Brokers, and that is a third party you can connect to Interactive Brokers. So there's definitely a lot of plugins and things that you can use, so just kind of be aware of those. Backtesting and simulation tools, this is going to be really important when setting up your environment. Would not recommend pushing any type of algorithm live until you've tested it in test environments, paper trading accounts, or in any type of test environment, to make sure that you have a good idea about how it's likely to perform in live markets. I really like, again, Interactive Brokers has a paper trading account that I test everything in. And that paper trading account has live data, so I get a good sense of how things will react in the real market based on that paper trading account and test environment. And then obviously data integrity, ensure that the backtesting data is of high quality and free from surveyorship bias. Using real-time data is going to be your best shot into any type of backtesting environment or paper trading account. So using a brokerage that utilizes live data in those is optimal. But just be aware of those backtesting and simulation tools that your broker offers. A lot of these are built in, into the software. And in some cases, I will create a backtesting environment in straight Python, and that's an option as well. If you want to test something, we can literally just grab a set of data and create a program or a script that mimics what your trading algorithm would do, and then just run it over a set of data. And so sometimes you can create your own testing environments. I've done that for some of my algorithms. Obviously, reputation and reviews is going to be important. So again, this is just using a reputable brokerage. Check the reviews. I found in my many years of business that even the bad reviews, there might be a nugget of truth in there. So definitely work with a reputable broker, but look at their reviews and see what other people are saying about them. Geography and legal consideration, definitely have interest from all over the world in algorithmic trading. Some brokerages will only service some countries. Some brokerages in the U.S. will service many other countries outside the U.S. Some they won't. So you just need to be aware of the jurisdiction, tax compliance, and any restrictions that the brokerage has based on your geographic location, and then also any type of, again, legal considerations or tax implications. So definitely seems like some brokerages are more popular in certain parts of the world, and some brokerages are more important in other parts of the world. So I think it's fine using whatever brokerage you want, so long as you have a lot of the items on this list, have those all checked off, and you're comfortable with the reputation of your broker. Then choose a brokerage that works best for you. Scalability and performance, again, I don't trade in milliseconds, I trade in seconds. So I do want reliability. But if you're a hardcore high frequency trader, you're definitely going to want a brokerage that is scalable and has that very strong infrastructure and support to really scale up. If you're a hedge fund or an institutional level trader or a quant that's really starting to do high frequency stuff or manage massive accounts. Risk management features, obviously real-time monitoring, automated risk controls, portfolio analytics. Those built-in tools are pretty common in most brokerages, but just be aware of those for your brokerage, that they have some of those risk management features. In terms of risk management for algorithmic trading, that is something that we kind of have to build in as we are, at least, in terms of risk management, in terms of stop losses and how we control all that. That's just a part of your algorithm, and that'll be discussed as we go through various scripts and algorithms. Legal compliance and support, obviously, again, just making sure that your brokerage is fully compliant with all of the regulation in your jurisdiction. Educational resources, I think that, I just grabbed MetaTrader's API documentation, and it was 3,000 pages. I was like, geez, this is a lot of documentation. So there's a lot of educational material for some of these brokerages. Interactive Brokers has a whole campus and a lot of educational material for their API and trading. That's one of the main reasons we're building this community, is to hopefully create support and education around algorithmic trading. Hopefully our community is a little bit more hands-on and really showing you exactly how things work. But make sure that your brokerage does have a good resource for, obviously, the API and anything that you're doing. And then obviously the last thing is just to make sure that there aren't any unusual contract terms or conditions when you sign up for a brokerage. And that's it. So this is a pretty extensive list, about 20 items to look at when you're choosing a brokerage. But again, I do think that there are some items on this list that are more important than others. We are going to have a long list here that we're building out that will just walk you through how to set up algorithmic trading on a particular brokerage. So we will, for instance, Interactive Brokers, we have a table of contents and we walk through, here's exactly how you download the program, your system requirements, how you set it up, how you set up your API settings and all that. So we're going to do that for as many brokerages as we can here, at least the most popular brokerages. But if you have any questions or comments about choosing a brokerage, I will attach a section to the bottom of this where you can leave a comment or a question. Thanks.